What is the Austrian School of Economics critique of fractional reserve banking? Have you ever wondered how banks can lend out more money than they actually have? This is a key issue in the critique of fractional reserve banking by the Austrian School of Economics. The Austrian school, which aligns with libertarian principles, raises several important points about this banking practice. First, they argue that fractional reserve banking allows banks to create money from nothing. When banks lend out more than they hold in reserves, they increase the money supply. This can lead to inflation, as more money chases the same amount of goods and services. Next, Austrian economists believe that this practice contributes to business cycles. By enabling excessive credit expansion, fractional reserve banking leads to artificially low interest rates. These low rates can encourage malinvestment, which means that resources are allocated to projects that are not backed by real savings. When these investments fail, it can trigger economic downturns, causing harm to the economy. Another concern is the instability and risk associated with fractional reserve banking. Banks only keep a fraction of deposits in reserve, making them vulnerable to bank runs. If a large number of depositors decide to withdraw their money at once, banks may not have enough cash on hand. This situation can create significant instability in the financial system. There are also moral and ethical concerns raised by some libertarians. They argue that creating money without real backing can be seen as fraudulent. To address this, they advocate for a system where banks must hold all deposits in reserve. This would ensure that money creation is tied to actual economic activity, promoting a more stable financial environment. Libertarians often support alternative banking systems, such as free banking or 100% reserve banking. They believe these systems would be more stable and fair. By reducing the role of central banks and fractional reserve banking, they aim to create a more resilient economy. In the context of libertarianism, the critique of fractional reserve banking is part of a larger argument for sound money and limited government intervention. Libertarians generally advocate for economic systems based on voluntary exchange and minimal regulation. They believe these principles lead to more stable and prosperous economies. Understanding these critiques can help us think critically about the role of banks and money in our economy.